today with the co-founder and CEO of the Intrinsic Exchange Group. Welcome, Douglas.
Yeah, I think the fundamental is that we left nature out of the mainstream of the economy because we didn't see it as a resource. It was actually, we built a very effective economic system for extraction. And that was, the capital formation and the incentive was to make things efficiently and effectively. Nature was looked at as a abundant resource that maybe even need to be tackled. It was in the way and it didn't have direct value. The goods and services that we consume worldwide are equal to or greater than world industrial GDP. And half or more of our economy is dependent or highly dependent on those ecosystems functioning. I like to say we make dream green, but we live our lives with the red and black of financial statements on a personal level, on a corporate level and a governmental level. And if we don't rewire that and change the equation, it's very difficult to really make lasting, effective change. If we can convert those natural assets into financial capital, then we have the capital and price signaling to be able to tell the economy what we wanted to produce and how we wanted to produce it. But we created a new accounting system, which we called statements of ecological performance, which account for the flow of ecosystem services in financial terms. So think of that as your natural income statement. The asset that produces it, that produces those ecosystem services that are consumed around the world, worth over $100 trillion a year. And we included some biophysical measures like biodiversity, species richness. And we said we want investors to be able to look at both of those and determine what the value of not only price to earnings or price to revenue, but price to ecosystem service. If we take something and move it from producing X amount of ecosystem services to 2X, to 3X, to 4X, and that's the value increase in your equity, are you comfortable with that? Does that make sense to you? Can you buy off on that value proposition? And the investors are saying, we're desperate to match up our financial returns with our environmental and social ethics. And we can't do that at scale. So we have these major funds that are essentially doing negative screening, right? So what they're doing is saying, okay, I won't invest in fossil fuels or mining or timbering. But then everyone else's portfolio looks pretty much the same.